Hey, what's up? It's Ben here. I promise you that this video won't be a disappointment. You know that famous Chinese proverb, give a man a fish and you feed him for a day, teach a man to fish and you feed him for a lifetime? I'm going to show you my little secret of how I find the best long-term dividend stocks to invest in, so then you'll have the knowledge to catch your own fish, or in this case, stocks. Not a lot of people know about this, and for those 2 subscribers who've been following me since day 1, I got your back. The website that I use is pretty popular amongst hardcore dividend investors like Andre here, but their subscription fee is like $400 a year. Granted, they do provide you with research, analysis, and various other helpful tools, but for someone that's frugal like me, I'd rather just use that $400 to buy more stocks. So the website is called simplysafedividends.com. If you were to just go on their main website, you can't find this tool, or at least I couldn't, and I spent like a long time looking for it myself. It's a screener tool mainly for dividends. I'm not sure if this is like a pay members only kind of tool or not, but it's really useful because it tells you their dividend safety score as well. And if you want to know a company's dividend safety score, you need to subscribe to their service, but I'll show you a way around that near the end of this video. And the score is really helpful to see whether a company is going to cut its dividend or not, and I scoured the internet and I couldn't find a screener that is as good as this one. It's either your general stock screener tool or it's a really outdated screener that doesn't really give you the best results. I'm not sponsored by them or anything. This is all for free to help you out in your dividend investing journey. I'm not asking anything in return but for a simple thumbs up on the video for telling you my little secret. So with that being said, let me show you where to go find this tool. Now the URL that we're going to go on is one.simplysafedividends.com/John-screener/. Now I don't know why it's like that. The website itself looks pretty modern and updated, but it's not. If I scroll all the way down here, it says it's updated from 2017. This is supposed to be updated every single year, but it's not. And you know the video link is broken or it has a media error. And if I scroll a little bit down to here, you see all the criteria, and there's one criteria that's overlapping, and this is extremely important if you're looking for the growth year. And this is dividend growth streak, and it has this criteria, and you can click on it too, 10 to 20 years. This one is 20 or more years, and this one says 5 to 10 years, and this is less than 5 years. And you could click on these if you want these criteria. And if I scroll a little bit more down here, you see the list of dividends stocks. And also it says how to use the dividend stock screener, just a general brief overview of that. And it gives you their rating system and how they rate it. Basically anything that's above a 50 is considered relatively good or decent. But SimpliSafe has this criteria that they use for their dividend safety score. So anything that's 0 to 20 is considered very unsafe. Anything that's between 21 to 40 is considered unsafe, and then so forth. 41 to 60, borderline safe. 61 to 80 is considered safe, and 81 to 100 is considered very safe, meaning that they're unlikely to cut their dividends. And so we're gonna be looking at something that it's considered to be 61 or higher. So in this case. So if I scroll back up here, I'll show you, this is your general screener. So I'll just give you a quick overview of how I just scan it, so then you can find like good quality dividend stocks. Obviously you're gonna have to do more research into it once you find these stocks. But first things first, let me fix up the columns right here. Right now it's just on a preset or default. So I'm gonna look at the ticker, company name, and I want the no industry, I want no market cap, their safety score, growth score, dividend yield, dividend growth streak. I don't need this, I don't need this, I don't need this, and then PE ratio, I don't need this, and then I don't need this as well, just so I have room on my screen so you can see everything. Okay, so maybe just let me add one more. The PE ratio right over here. Okay, yeah, so you see currently you see all of this right now. So for the screener, let's go with, this is on the millions. So I want large companies. So I'm gonna have to type, if I type in 100, this is 100 million, but if I do this is if I put in 10,000, this is basically 10 billion in market cap. So this is that. And for the safety score, I want to put anything that's 61, again 61 or above. And then for the growth score, anything that's also, so for 50 or for above for the growth score, so I want something that's consistently growing every single year as well. And for the dividend yield, I'm looking at anything that's around over 3%, because like I said in my other videos, anything that's below 2% is like almost cutting it, and you're in the inflation territory mark, because inflation is about 2% a year. So if I scroll down here, you see there is 29 entries, so basically 29 stocks, and I'm gonna do 50 entries right here so you can see all of them. So currently right now, these are all the stocks that satisfy that criteria. But that's a little bit too much for me to pick, so what I'm gonna do is go back up here and change some of the criteria. So I'm gonna add a little bit more, so I'm gonna do something that's between 5 to 10 years. And also looking for a let's see, what should I add? PE ratio. Where is it? From 13 to 25. You don't have to submit or press enter, the system already updates it for you. So right now, these are the two stocks that it spits out. So Cisco and Paychex. So dividend safety score is 91 and the growth score is 62. This one, it barely hits this the dividend safety score, and the growth is 84. These two, I believe these are good stocks because I have Cisco, but I don't have this one. The reason why I have Cisco is it's at 91 safety score, and if you follow me, I do have Cisco on my Roth IRA. So this tool can really cut down your research in like matters of minutes, and if you really want some like high dividend growth stocks, you can easily put a dividend yield of higher than 3%. And if you want something that's like a monthly dividend, you could go here and just pick monthly, quarterly, or semi-annually. So right now you just pick quarterly. Obviously nothing's going to show because it doesn't match that criteria. So this tool is extremely helpful for finding good quality dividend stocks. So now I'm going to do a reverse search for those companies that you want to see their dividend safety score in. So for example, I'm going to choose Verizon. So I'm going to pop this up right here. So Verizon is currently trading at $58.99, but that's not important. What's important is we want to screen it out in this screener right over here. So most importantly, look at the market cap. It's at 244 billion, right? So what I'm going to do is, and also look at the dividend yield too. It's at 4.17%. So what I'm going to do is go here and do like a reverse search. So it's at 244 billion. So I'm going to put the market cap around right here, 200. So over 200 billion for the market cap. And then I'm going to clear all of this. This I'm going to leave at 4% because we know that the dividend is over 4%. And then for the PE ratio, I'm going to just basically reset all of this except for the market cap and the dividend yield. And if I scroll down, that should be it. I cleared all of it, right? Yeah, clear all. Oh wait, no. Oh, so this is going to be quarterly, yeah, because Verizon pays quarterly. So if I scroll all the way down, you see Verizon right over here. It has a dividend safety score of 87 and a growth score of 16. So like if you're interested in a stock and you want to see if their dividend safety score is, decent, above like a 50% or a 61%, then this is how you do it. You just basically do a reverse search, go find the market cap and go find the dividend yield, like just a ballpark area or below the area, because dividend yield obviously fluctuate and market cap obviously fluctuates to the market as well. So once you find that, all you have to enter is those two criteria. If a lot of a company pops up because you have a really popular market cap, just go ahead and add a little bit more screener in there. Like if it's a monthly kind of dividend payout, just put it in there, and I'm pretty sure it'll weed out all the other company that's not a monthly dividend stock. So right now, that pops up, and then if you want to know AT&T, it's 65. But AT&T is basically a really good stock. I have these two on my portfolio as well in my Roth IRA. So I hope you found this helpful. Overall, this is just a tool for you to help you seek out your best dividend stocks. It's not a good idea to shoot for a really high dividend paying stock that's over like 10% because you'll run the risk of having the stock price drop on you in the long run, and you could end up breaking even or just losing your gains. If you're just strictly looking for a safe dividend investment for the long run, you might just want to stick to a high dividend safety score with a good growth history so your dividends won't be cut. Again, it costs money to see their dividend safety score, but with this secret method, you could do a reverse search and you won't have to pay anything to know what a stock's dividend safety score is. Hope you all found this to be helpful. If so, feel free to give it a like and consider subscribing for more content like these. I'll catch y'all later.